Hello everyone, my name is Parul Verma and welcome to my channel, Your Everyday Economics. In this channel, you'll be learning about key economic concepts and personal finance that relates to our daily life. If you follow the economic news, you must have heard that the Fed has raised the federal funds rate by 25 basis points. I will be explaining you the rationale behind raising this rate and what are the implications of this rate increase to common people like you and me. So stay tuned till the end of the video. Federal funds rate right now is between 4.5% to 4.75%. But what is this federal funds rate anyway, and how does it even matter to us? Let's learn about it in this video. The federal funds rate is the rate at which commercial banks borrow and lend money to each other. This is typically done for a short duration, such as overnight lending and borrowing. The United States Fed does not directly control the federal funds rate, but has other indirect methods to control it. This is a topic of discussion for a separate video, so stay tuned for that. So yes, coming back to my point, the Federal Open Market Committee, also known as FOMC, meets 8 times a year and decide what that federal funds rate should be based on the prevailing economic conditions. So right now in most countries and in the United States, there is an inflationary trend, meaning the prices of a lot of items are still very high compared to their normal level. So why does this federal fund rate even matter to us? Well, because the federal fund rate is the key rate that influences all the other interest rates that you and I care about, such as interest rate on car loans, interest rate on your mortgages, and many other interest rates such as the interest that you pay on credit card and other loans. So this is the key rate that affects all the other interest rate. And I'll explain you how this works. If the Fed makes the target range for federal funds rate high, the banks now have an increased borrowing cost if they are running short of the minimum amount of reserves that they have to maintain. So when the banks are borrowing money from another commercial bank, they have to pay a little bit extra interest. Now, we know that banks are just a profit-making institutions, just like any other business. So this extra interest, they have to pass on to the consumers, and they do it by raising interest on credit cards, mortgage loans, as well as your car loans. This directly affects us individuals because we have to make these transactions every single day using our credit card. Sometimes we have to buy home or take loan for our car. Similarly, for businesses, whenever they want to expand and borrow money, they have to pay higher interest rate. So now I hope you know that why this federal funds rate that we hear in news is so important. The federal funds rate is the key rate through which Fed controls inflation and unemployment level in the country. Let's learn about how that happens in my next video. If you are liking my videos and you haven't subscribed to my channel, please do so. It will mean a lot to me because I'm investing my time and effort to make these videos available to you so that you can know what is happening in the economy and why does it really affect us. So thank you very much and I'll see you soon in my next video. Bye.